It has taken me over 4.5 years to learn some deep, painful truths about day trading. I've lost so much money to the markets thinking that my strategy is wrong. I need to learn more, and to some extent it's true. But this is just the tip of the iceberg. Gold yesterday gave us a massive sell, and we shall use it to uncover some of the secrets in day trading so that you can unlock that new trading level in your trading journey. Stick around to the end because I have a bonus point that connects all the dots. If you're new to the channel, subscribe. Let's do this. Step 1 is the signal days. Now, I use the failed breakout to predict where the market is headed throughout the week. And there are many signal days. First red days, first green days, failed breakouts, etc, etc. And there are a couple of mistakes new traders make once they know, oh, there are signal days. And mistake number 1 is trying to use all of the signal days simultaneously. And you get confused because you have so many pairs, you have so many signals, so which pair do you pick? Which is the best? Mistake number 2 is overcomplicating things. Oh, the failed breakout needs to close below the previous day's low and does this, does that. You need to make it as simple as possible, and I will show you how I've done that. Mistake number 3 is ignoring your signals. So price tells you sell, and then you, being a hard head, you decide, okay, this level looks nice, I'm going to buy and then sell later. And you wonder why you are not getting that consistency that you want. So this is how I have simplified my trading process in terms of the weekly cycle. So if we look at gold, Monday set the low and the high of the week. Then Tuesday, price breaks out and closes outside of the range. So all I do is adjust my high to that level, and then on Wednesday, price breaks out and closes back inside of the range. This is what we call a failed breakout. And I am analyzing my markets all on the 15-minute time frame. Now, once I have a failed breakout, that is a sell signal for the next day. So when I came to the screen yesterday, my purpose was to sell the next day, nothing else. So I just wait for my setup to form. This brings us to now the trading day. However, before we talk about the trading day, the failed breakout tells you how the market will move throughout the next few days. And how does this happen? So yeah, we see price gave us that failed breakout on Wednesday. So we know what to do on Thursday. Now, we were selling on Thursday, we got the sell. However, Thursday stayed within the range of the high and the low of the week. We've not broken out, we are inside. Which means the bias of sell still remains. We continue selling on Friday. So we can see the train has already left the station. However, if price comes back and gives me my sell setup, which I will show you how I identify it in the trading day now. And if today also, price stays within the high and the low of the week, we can also sell on Monday. Now, let's talk about the trading day. Now, the trading day is the most important day because it determines whether you are going to make money or lose money. But there are also a couple of mistakes new traders make when they are trying to identify their setups. Mistake number 1 is not having clear levels. What this means is that you have not really identified a specific time frame that you will analyze your market from. So you find yourself jumping from the 15-minute time frame to the 1-minute time frame, and you identify these poor levels that get you stopped out, and then the market still continues in the direction that you had predicted. Number 2 is not having a significant range. So if we look at gold yesterday, the range was about 150 pips. And so if I am trading gold, I know if I want to make money, I want to target at least 175 pips there. And so if you don't have a range that can give you good money, then obviously you will get poor setups. And then lastly is focusing on the unimportant stuff. So this means that if you have not defined your entry criteria, then Everything else is unimportant. And if you focus on, have we got the stop hand? Oh, has price given us any pattern? Like, if you don't know exactly how your entry looks like, the rest is unimportant. Now, let's look at the trading day. What is the process that we follow? So step 1 is time. Now, the market is divided into 3 sessions: Asia, London, and New York. And we need to come in these timing windows, and we need to come during the sessions and capitalize on the first 3 hours of the session. That way, we have the most volume and we get the highest quality setups. So yesterday, when we came to trade gold, we came in the London session. And the London session for me begins between 3 and 5 a.m. New York time. All right, so we have our timing window, these 2 lines, that's time. The next step is identifying the high and the low of the day. Now, the high and the low of the day is simply the highest point price has reached and the lowest point price has reached in that day. And the reason why we do this is because we want to identify that range so that we know whether we will have a big move or we will have a mediocre move. Then the next step is identifying your levels. So the levels is just areas where price is consolidating. And if we look at gold, we have this area here. We also have this area here. It's too close to the low, so I won't even draw it. But we also have this area, which is in the middle there. This is the major level. We have 1, 2, 3 bounces there. And so my thinking is, the moment we break below these levels, then price will automatically continue to the next level. So what happens? Price actually gives us another level here. So this is an area where price again started bouncing off of. And my thinking is, if we broke below that level, we have an entry. And this brings us to the conditions for entry. All this price action is useless if you don't have a specific way of entering the market. And you need to visualize the movement of the market in your head even before the market has already printed out the charts. So my thinking is, if we break below this level, then there's a very high probability price will continue to this level. And if we break below this level, price will obviously continue to this level. Simple. So we can see that price did break out in our timing window and closed below that level. That was my entry. Stop loss is at that high, and then we are targeting this low here. Simple. And then now we are at the mercy of the markets. Simple. This brings us to the bonus. You will see so many setups every single session, every single day. And the biggest challenge that you have, and I face even to this day, is sitting on my hands and doing nothing when I don't see my setup. And so for this system to work, you need to build that muscle of doing nothing when you have no setup. Now, the entry and exit criteria of this strategy also is doing nothing. So when I got in, my theory is, if I'm wrong, price will come and stop me out. If I'm right, then price will continue breaking below these levels until it clears all this liquidity down here. And so I don't need to worry about price movement in between. I just let it breathe. Simple.